In today's video, we're going to take a look at one of the setups I gave you. I don't know if it was early last week or the week before, but it was in XLB. You'll be able to go back and find the video on YouTube somewhere. But we need to talk about setup plus trigger equals trade entry, and then you manage it as far as, you know, the formula for making money with this work. So what was the setup in XLB? The setup was this price cluster decision, which came in between 56.87 to 57.18. That was the setup as far as the price work. Now we also had some timing factors there, which, you know, was supportive of the setup. So for example, we had one cycle on the 26th, one on the 22nd, one on the 25th, another one on the 25th. Now the cycle that's easier to recognize would be the fact that this prior high to low swing lasted 9 trading days, and then the most recent high to low swing also lasted 9 trading days. So we had time and price come together. That was the setup. What is your trigger? What tells you to get in the trade setup? Well, for a swing trade, you can either use the aggressive swing trade trigger, which will get stopped out more often, or the regular trigger. So the aggressive one is the 15-minute chart, the 834 EMA crossover. The not so aggressive is, you know, on the 30-minute chart with the 834 EMA crossover. And then typically I also like to see it take out a prior swing high, okay? But at least use the moving average crossover. So this being the setup that was tested, you want to get involved in the trade as close as where your risk definition is, which would be underneath this cluster, as possible. And in order to do that, you need to go to the lower time frame chart for the trigger. So here's the 15-minute chart. Now here's where we made that low, into the cluster. So where's your first trigger? Okay, on the 15-minute chart, here is the moving average crossover. Look to the left, you can also see that it took out a prior swing high. Now, you had an initial rally there, and then it would have scared you on this pullback, but it never took this low out. Okay, so that was your trigger. Okay, and then as you move forward, you want to give the trade a little bit of a chance to work things out, because you don't want to be like, well, okay, you had the crossover here and then it crossed over here, so I need to get the heck out. No, you don't really want to do it that way. You just want to use the crossover for your initial entry and then manage it by other means. So the part of, you know, after you have your trigger and you take your entry is to manage the trade. Now that includes where your initial stop is, when you're going to move to a break-even stop, when you're going to start using a trailing stop, and when are you going to exit the trade. You could just use the trailing stop, and that will exit you, you know, once the trailing stop, you know, goes beyond that, you'll be out of the trade. But there are some that will get out of maybe half a position at the target number 1, which is always the 1272 extension. But another part of management is if you move into some hurdles and you can't get through it, that's when somebody might move to, you know, break-even stop or better. Okay, so at this point, you know, you had the setup, you had the trigger back here, and now it's starting to play out. So I mean, at this point, I think you can have better than a break-even stop. But if we can eventually push through the hurdles, which the first one's going to be 59.65 area, the second one will be, let's see where that comes in, 60.33 to 60.54. If we can push through those hurdles, then again, I'm going to look forward to this as my initial upside target. And obviously, just because I give you a target doesn't mean it's definitely going to get there, but that is typically what we shoot for.